Hello, hello. Yeah, hear me? Yo, my fault. What is that? My mic was just not. My mic was not logged in for some reason. Should be good now. Okay. So, like usual, guys. So today's redemption day. We gotta make our money back. Uh, the market, snatched it, so we gotta make our money back. I scalped for like $100 on 5 accounts for now, but it's nothing. So I gotta catch a bigger picture play. I think we could have a nice play back to the downside right here. I like that. There was a good play here on the short V signature. That's a clean scalp back for 1-to-1 for sure. YouTube strat. This didn't take it though. 42. Yeah, we could have a play here with that 5 minute breaker. I like that. So yeah, for the I'm gonna do a giveaway like usual, guys. So 80 likes, and I'm gonna give away a 50K account. If we get more than 80, I'm gonna give away bigger accounts than that. So like 50Ks, but let's say it would be growth or straight to funded accounts. All right. Appreciate you. Appreciate you. Yesterday, I posted the my journal for July on Twitter. So yeah, I can see the loss I took yesterday. So being really transparent for real. The thing is like you gain nothing from being transparent in the community. Like when you show losses, people turn into market makers. Are like, yo, why did you short here? There was this, and that. When in reality, it doesn't mean shit. But it's not that bad. I'm not getting hate like that. We're looking to get into shorts really soon. Actually, want to see how we can hold those levels. My short would be around this breaker right here on 5 minute chart. I like that. So that is the second distribution. As you guys see, I close below the breaker right here. Then there is another structural point we broke below. So if we pull back here, that would be the second distribution. That was the first. That would be the second. So hold, pull back. That short on the 30 minute was not bad. I'm not gonna lie, for sure. Like this 1 minute inversion right here was really good because it was respecting the power of three. Like I said in my YouTube recaps, if you guys look at them, I know they don't have a lot of views though. Do you have a live trading channel? What do you mean, live trading channel? Yeah, I am looking for shorts, but I need to see some more confirmation. being created. I would like, right here, I would like if we can, go down a little bit more, then pull back up. That would be the best. You mean a paid service? I mean, yeah, but paid service on Discord, it's like, I don't know. Paid, like, I have one, I have like a VIP, but it's not necessarily for signal, it's just for value. It's like trade recaps, like 105 trade recaps. It's PDFs and this and that, and having a community of people that don't want to signal bot, or just a community of real traders. That's really what you would pay for. I don't have yes, I do live trade there, but you know, I don't have a high frequency of trades. So in the first place, it's not really for signal bots, that's for sure. I only trade with one-to-ones, yes. Sometimes lower than a one-to-one. Like yesterday, my trade was 0.8, I think. I took a full size loss. It's been a while that I didn't take a full size loss. So yeah, to the chin. It was it was the thing is the trade was good, respected everything. The only thing that pissed me off is the amount of time it took before I hit my stop loss. It's like usually I wait around maximum 20 minutes, and it took the whole hour for me to know if I was gonna hit my target. So at this point, it's like this is some unnecessary stress. Like I like to scalp in and out really quick, and that one was just a bigger picture play. But usually, basically, what I hated about this trade is the fact that it gave me hope like 5 or 6 times. Like it went up back to my break even, then boom, one candle erased everything. When you see this, it's like there's so much resistance uh, at the highs, so the bears are in control. When it's like a slow grind up, and then one candle displaces down, rips off everything. You know it's uh, it's gonna be hard. How do I determine my bias? Um, Candle closures. If we close bearish, I don't want to fade the participants that are in control and that made that candle close bearish. Basically it. Never want to fade those. What's up, guys? What's up? What's up? So definitely looking for some possible shorts here. I will log into my Tradeify right here. Let me look at the range. I like to pull out my fib to see like how how deep the range is. Let's take my stop loss. That will be a one con here. Would be one con. Quite a deeper pullback. It will look something like this. I like this area. I know we could definitely feel this 15-minute gap. I'll be looking for shorts here. Opinion on personal funds versus funded account. Yeah, I think with the opportunities that we have right now with funded accounts and the amount of money you can make from them, you shouldn't be trading a live account. You should use that leverage that prop firms give you in order to make enough money to build your own live account. Um, but if you're not trading prop firms right now, even if you have a live account on the side, you're missing out big time because of the amount of return on investment you can make from them. Absolutely. Like that. I like that. I like that trade. That's pretty much it, man. If you buy an account for let's say 300 bucks or like 250 and you can make 2000 out of it, that's almost 10x your initial investment, you know, which is incredible. You get it. Yeah, this is gonna be hard to get. Those kind of scenarios are definitely hard to get the entry on. 8.5, range is getting bigger. Yeah, we do get the pullback right now. This rally gap will be strong, most definitely. But I'll put my limits at 54. I don't know if we're gonna get it though. It looks like we get no retracements at all in the current market conditions that we're at. Yeah, we're not gonna get it. Come on, G. Bro, these market conditions are like they're so good in a way that they don't give you any retracements. They're hard to gauge, man. What the fuck is this? What am I supposed to do? Holy shit. We're not used to see those, by the way. Your voice is very low. Is that real? Is my voice low? Tell me if my voice is low. God damn, no retracements at all. It's good. Yo, Mo, just increase your volume, bro. There's a lot of people telling me, yo, you're lagging. When I think they are lagging. Oh, alright. Wanted to catch that second distribution, but that's the hard part in trading, in my opinion, is being able to eat from those moves, but taking the risk of being stopped out for not, let's say, for not waiting for the retracement. I really like that. Thing is, statistically, this is pretty rare that we see this. Not rare, but we usually see retracements way more than just really good distributions like those. So, not really mad. It's just when I wait for the retracement, like it looks like it wants to do something else. I just tap my stop loss like yesterday. Where are you from? Canada. Look at those moves. This morning I wanted to enter on a pullback, no pullbacks again. Right here wanted to enter on a pullback, no pullbacks again. It's like, look, straight down move, straight up move. Like the retracements are not deep at all. These are the kind of adjustments you need to make sometimes in some market conditions to make money, because it's not always going to act the same. It's not always going to give you full 50% retracements or 30% retracements. You trade live daily? No. I trade live Wednesdays, Thursdays, and Fridays. And in my Discord, as soon as I see an opportunity, I go live. So it's basically every day, but depending on the amount of trades that I have in the month. So coming back from that big loss yesterday, I need to be aware of the risk I'm putting in. I can't just go in the market and be like, I'm gonna make the money, I'm gonna make back the money that I lost yesterday. Basically, like what happened, if you take a look at my journal, is that you'll see I win sometimes like 2.1K, then I win like 2.7, I win 3.1, and then you'll see like sometimes I win 6K, and sometimes 6.2, and then yesterday I lost 6.2. But the thing that I'm doing is I'm doing exponential bet sizing. I'm doing exponential bet sizing, which means that I risk more on the setups that I judge being more A plus. A lot of people are gonna disagree with that, with that way of doing, of course, you know. But I think looking at your data, there are setups that gives you better chances of winning. You know, I see trading basically as a hand of poker or blackjack that is dealt, and not every hand is a hand that you should double your size. But let's say you got pocket aces in poker, like you are not gonna bitch out of that hand, and that's the same thing. I have, let's say, one model that I know does so well and is doing so well in 2025. So I'm comfortable risking a little bit more um, because I know I have more odds of winning. Unfortunately, you saw yesterday I lost, but um, it's hard a little bit mentally to be like, damn, I just gave back quite some profits because I was doing, I was taking B setups for like 500, $600 per account. Um, and then once I have my real trade in front of me, I lose. So I give back like two or three of those small winners. Of course, it's hard mentally, I'm not gonna lie, but this is what I signed up for. You know, this is my plan. What do you guys think about um, that approach? Because there is different approaches, of course, but I'm still, I'm still new to that risk management aspect because there's so many ways you can have an edge in this market. Basically, there's some people that, if they risk the same amount every single trade, they will possibly end up being a non-profitable trader. But these guys are so good at understanding when they have more odds of winning, so they add to their winners and they cut their losers super fast. So they have like a huge edge in terms of risk management also. Not necessarily a technical edge, but a huge edge in risk management. When I think about this, I think about Kane, you know, Trader Kane. This is basically his approach. And I totally agree with the fact that there is setups that have better expected value. But the thing that is hard um, with this is that it's still a random distribution. Your wins and losses are randomly distributed. So I could still end up losing 3 times in a row or 4 times in a row with my A plus setup, and by risking double the amount of size that I'm risking on my B setup, so I would lose the account. More times than not, it will not happen, but I know there's still chances of that happening. So mentally, it's challenging for sure. It's not easy to, like yesterday. I'm not gonna lie. When I was in the trade, I didn't feel that good because the whole month I only had one full size trade and it won. And then yesterday was the second trade, which was full size. And when it's a full size trade, let's say you enter for 1.2K risk per account times 5, 6 point something K. It's not, it's not small bucks. So still following the plan is just, when you lose and you go journal your day and you go on with your day, there is some voices in your head being like, damn, why don't I just trade $700 of risk every single time? So like even if I lose, like I built such a big buffer right now on my accounts that even if I have a loss streak, I will still be up pretty decently. It will just take more time for me to get the payout, but the hardest part has already been done, you know. So these are stuff that I'm currently dealing with, knowing it's not knowing it like I'm doing it, but it's just it's not as easy as people think. Exponential bet sizing is a good thing when it works, but when you go into a loss streak and you had good hands, but sometimes that will happen. Even let's say in poker, you have pocket aces, but someone has a better hand than you, and you were really confident, and you just lost all your bread, and that will happen. There's some hands where like 2 or 3 people will go all in, or like 2 people. Are you up on the month? Of course, bro. I'm not down on the month because of one trade, impossible. But it's not as easy as people think to have a dynamic risk management approach. You can easily crash out. Let's say you win, like let's say you win 5 trades in a row, and all those 5 trades were around like $500 of per account. Okay, so you made 2.5K, and in one trade you give back 1.2. One, you could have made 1.2 on that trade. Of course, that's always what you have to think about, because you still had more chances of winning either way with that approach. Thing is, one win streak with that, let's say with the exponential bet sizing, uh, you build your account pretty fast. I've been off X lately. Let me just put it here. Trying to focus. I'd like to ask. I see you making 3 figures daily, emphasizing base hits and making 4 figures net per month. So if you had a 50K, how much would you raise? A 50K prop firm account? Is that what you mean? A 50K like funded account? And by the way, my weekly trade frequency, it depends. Like, I changed my approach a little bit because I really had a low frequency. You know, I was basically only trading my A plus setup with bigger size, but this month has been so dry that I started implementing those B setups in my trading. So yeah, it's not it's not just technicals in trading. There's a lot of stuff. When I say psychology is overrated, it is, but it is still super important. It's these are the stuff that are gonna make you crash out. Exponential bet sizing is gonna make you crash out. Like most definitely. Taking like two losers in a row, max size, let's say like bigger size than what you're usually taking, you gotta be you gotta be cautious of what you're doing after that. Friended account, I'm not really I can't really tell you how much to risk. It's depending on your edge. For me, it's pretty easy. If you have a low frequency, let's say you have 10 trades per month, then you need to risk more in order to make up for those days that you didn't trade. That's simple. And if you have a high frequency, then you can just risk the same thing, let's say the same amount. But you have so many trades that at the end of the month, you still have quite decent profits. So it's all about your strategy. I don't know your strategy. I don't know exactly how many trades you have, what's your data. It's all about your data at the end of the day. I can't I can't tell you how much to risk. It's like let's say you take 8 trades per month, of course risking $300 per trade or 350 is a good thing, you know? Because it would take you like 6 months to make 2K if you're risking, let's say, 150 per trade. But let's say you have 4 trades per day, risking 150 is not bad, you know? Do I agree with taking 4 trades in a day? Not necessarily, but if it works, it works. Have nothing to say about that. Like you can just see it on the 15. Like those 15-minute candles are super like unidirectional. Like it's bullish, then bullish, bearish, 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 bullish, 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 bearish, bearish, bearish. So there's no like inside bar candles or pullback candles. Like the wicks, the up wicks of bearish candles don't go far into the body of the previous one. That's how you know it was just a one-sided move without any pullbacks. How many legs do we have? 30? We're not even close to the advanced account. Come on. We're locking, guys. Like the stream, and I'm gonna do a giveaway. At the end of every stream, I'm gonna do a giveaway for sure. Like I have accounts for y'all. It's just y'all need to show love on the stream and like it. That's the job I ask you to do. Unless I only take 3, 4 trades in my personal account per month. Unfunded is a bet. Okay, you bet more. Unfunded 6 to 8. What you just said is really smart. Listen, just put yourself in that situation. Let's say, okay, because trading is the same thing with, let's say the percentage that you're gonna make is the same thing, right? Let's say you make 5 Rs, so 5 times what you risked, then you can make it with a bigger account. You just have to increase that R multiple. Instead of risking 200, if you risk 20,000, then you could be, instead of being up $1,000 on the month, you would be up $100,000 on the month. You know, it's as simple as that. So what you just said, let's say you only take 4 or 5 trades in a month with a live account. I totally agree. let's say you had $1 million in capital in your live account, would you take lower probability setups? Would you settle for something less than an A plus? No, the best traders in the world, you know, I would say they don't take 4 or 5 trades in a day because they are not high probability trades over the span of 5, 6, 10 years. They have like a playbook with extremely well-defined setups that has proven to work, and they're going to put on bigger size on those trades particularly, um, because they know they have more chances of winning. But listen, prop firm is a whole different game. The thing with prop firm is that you still need a model with quite a high frequency. Basically, what you need with prop firm is a model that generates alpha. Okay, so it generates like small positive expected value. Okay, you don't necessarily need a model that is profitable to make money with prop firms, right? Because as you guys know, um, let's say you have a model that has 60% win rate, right, with a 1-to-1. That is like super interesting. Listen up, and it's like a 1-to-1. All right. Basically, let's say this model, usually when you're gonna find any models on your own, let's say this model will possibly be profitable. All right, but if you had a live account, even if you risked $1,000 per trade, you will just end up making $26,000 at the end of the year, which at the end of the day, you're better off, you know, trading, not trading, but you're better off working a regular job. Let's say, if let's say you don't have any live accounts that would um, let you risk more than $1,000 per trade, or if that makes sense. So let's say for you, um, you only need a strategy with a high win rate, low risk to reward, and doesn't need to be extremely profitable and generates, alpha over the years, because the wins and losses are randomly distributed. Okay, thus they're randomly distributed. Okay, so if the wins and losses are randomly distributed, it means that the odds of you having a win streak with a low RR strategy is super high. Okay, you will face a lot of market conditions where you will go on 5, 6, 7 trade win streaks with a 1-to-1 risk to reward. It's not something that will not happen. So knowing this, um, even if you lose your account, every time you get a payout, you make 15x your initial investment. So you would need to blow your account 15 times in order to be break even after you get one singular payout. You know, so if you have a strategy with a low risk to reward and a high win rate, the random distribution will basically uh, make your payouts, if that makes sense. But if I have to, let's say, if I have to redo it again, there's a lot of concepts talked here, but basically, if you have a high win rate strategy with a low RR, okay, that comes together, you're not gonna face big loss streaks, okay, and it generates small positive expected value, but you need that to not blow your account. Okay, you can't have a strategy that has like a 1-to-6 and then creates big swings in your P&L curve, because those swings will blow your account right here, and those are loss streaks that are made because you have a high RR. So you need a low RR strategy with a high win rate. Um, so the random distribution, so the random wins and losses will make your payout basically, anyways, because you don't need, let's say, to be profitable at the end of the year in a prop firm. You don't need um, you don't need to have a payout at the end of every single month. If you have, let's say, six payouts at the end of the year, okay, and every time you get a payout, it's 15x your initial investment, let's say for growth accounts, then even if you blew your accounts in the six previous months, okay, you're up a shit ton of money still at the end of the year. That's why prop firms are so strong. Is because you don't necessarily need to have a strategy that generates big positive expected value, you know? Because with those low RR strategies, what you need to understand is that you need big capital to make a lot of money, right? So there's basically two ways you can trade. There's the high RR approach, and with that approach, you don't necessarily need to bet a lot every single time to make a lot of money. So let's say your risk could be strict $1,000, but your risk to reward is, 1 to 3, so you're making 3,000. Okay, good luck on finding an edge with that, like a real profitable edge. But let's say you don't necessarily need to have a lot of capital or risk a lot of capital to make a shit ton of money. Okay, because your risk to reward is high. But let's say with a 1 to 1, you would need, let's say with a live account, to risk around like from 3,000 to like $6,000 in order to make above like 150K per year. That's just basic math. Because let's say you have a strategy that yields you 200 trades and has like a 60, let's say it's 68% win rate with a 0.8 risk to reward. Make the count. If you don't risk more than 3,000, you're now making above 150K. So that's why prop firms are so good. So you can risk this amount with the lowest initial investment possible. See, those are like the basics of why you should trade prop firms in the first place. It's like the chances of you making 100K with a live account are so slim because you don't have access to that amount of capital in the first place. It's like if you had access to that capital, then your whole trading would change. You wouldn't take that many setups. Um, you could just risk more on the high probability setups, etc., etc. So like prop firms, they are, especially like a firm like Tradeify, who gives you access to accounts with no evals. Once you understand that you don't even need to pass an eval, and you make more than 6x your initial investment, or like the 50Ks when they had the discount for the 50Ks, it's not like I'm not biased at all. You're you're buying an account for $250 where you don't even need to pass an eval, and if you get the payout, you get paid 2,000. Like it doesn't even make sense. You know how crazy that is if you have the skill? It's almost 10x your initial investment. So you could listen, you could lose that account 9 times and get one payout and you're profitable. You know? That's crazy. That's crazy. That's these are literally the maths behind those. You could lose this trade to, let's say you buy 10, you could lose 9 of them, get one singular payout, okay, and you'd be break even. We'll make the math. But that's why like it's um it's hard to convince people that they don't have the right approach. Let's say for prop firms, being a prop firm trader and being a live trader is two completely different things. Completely different. It's like it's two worlds, literally. There's one where it's risk on. You know, for me, prop firms is risk on. Um, the more, let's say, the more risk averse you are, the less money you're gonna make with prop firms. That's for sure. 1000%. But with a live account, it's different. 39 likes. Yeah, we're we're not getting the. Come on, guys, like the stream. I'm looking to get possible longs here back towards that internal gap. I like that. If we can reject those wicks, but it doesn't give me any confirmations for now. I don't hate the setup. And by the way, guys, I looked at the stream yesterday to see if I actually was like mega mine, and bro, my cam was just so close to me. I don't know if it's that close right now, but bro, my cam was so close to me that I actually looked like I had a fucking big ass forehead. I'm not gonna lie. Promise you, I don't have a big forehead, but it looked like I had a big forehead. So I was like, what the fuck was that? Yeah, that's unfortunate. I wanted to be in this move. Expected, a retracement on the 5. Didn't get it. So right now, we're still looking for something. Possible pullback. Do you look at old 15-minute fair value gaps when price dips back down to them for possible inversions? Yes. Like that's the strategy I'm talking about on YouTube. Is that my main strategy? No. Does that work right now in the current market conditions that we are at? Yes. It's really good. No, it's really, really good. Like we can see it right here. It happened. Like I saw two good setups today in terms of inversions, and these are the ones. So right here, you see we sweep buy side right here, but what is there to our left? A 15-minute fair value gap and a 15-minute order block. You see how we tap that shit to the tick, to the tick. Did we? I think I'm talking shit. Yeah, we still tap the 15-minute gap though. By sweeping the previous candle's high, which is what I keep saying to y'all is like you need once that 15-minute candle closes inside the gap, you would need the next one to open to sweep the high, so you're not going to get manipulated and faked out inside this range. This is exactly what happened. So power of 3 swept the high, boom, right? Inversion for value gap right here. So we created a bullish gap. This is basically a fake breakout. When you create um, when you create a bullish value gap, let's say here, and you enter into a zone where you expect sellers to step in, then you can say to yourself, okay, if we're truly bullish, we should hold this to create a new high. So like the main thing people will do is that they will predict. And I think you don't want to predict in, let's say when you're trading, you want to react. So let's say here, if your value gap is a prediction play, putting your limit order right here that and predicting that this fair value gap will hold is, in my opinion, dumb. You know why? Because there's chances of it not holding. So why would you predict that this will hold in order to create a new high just because you know the concept of a fair value gap? The the concept of reacting is waiting for certain participants to get squeezed in the market. So let's say here, prediction play, a lot of people are going to go long here, okay? Because a lot of buyers are located between this candle's down wick and this candle's up wick, okay? Low volume, aggressive buying. So then the reaction play would be to wait for those buyers to get disrespected so okay, all those people are going to get the fuck out of their position by clicking on sell. Okay, if they bought here in the first place, they either have a sell stop sitting right here, which will, make price shoot down pretty aggressively, or what will happen is that they will click on buy to get out at break even right here, and if they clicked on buy, they will click on sell to get out of their position. So everyone will be selling inside this box. That's basically the principle of covering. So That's why, like, you need to recognize, let's say, in my opinion, good scalping opportunities for prop firms. Like, I'm not joking. For prop firms, you don't necessarily need more than this. It is definitely a strategy that generates small positive expected value and that has a low variance. Low variance means that you don't have a lot of like you're not how can I say that, exposing yourself to big swings in your P&L. There's not huge dumps in terms of like negative P&L and this and that. So like it's usually like super. Um, it's usually a nice curve like this on the P&L side. That's basically what you need. Yeah, it's just math. You gotta, sometimes it's better to just ask yourself, all right, am I like I have a profitable strategy? This is what happened with me, guys, by the way. It doesn't mean that you have a profitable strategy and you know exactly what you're doing that you're maximizing your potential with prop firms. That's being completely honest. You need it's a different approach from a live account, but you need to sit down and be like, all right, this is my win rate, this is my frequency of trades, this is my strategy, and then you take out your calculator and you're like, all right, this is what I'm going to be spending this month on evals or on straight to funded accounts. Looking at my data, I should have not I should have, but let's say I should have 20 trades in a month, and usually I don't have more than this amount of losses, etc. Worst case scenario, I get the payout in two months, and then you make the count. And then you're gonna be like, right now, like I'm not maximizing my potential because let's say I have a low frequency trading system and I'm risking 200, so it will take me 5 months to get the payout when the account, as soon as I get one payout, it's 15x my initial investment. So why would I care about risking more? Why would I care about blowing the accounts if it means that I'm gonna make more? You know what I mean? Sometimes blowing accounts doesn't is not a bad thing because this approach overall is what's gonna make you more profitable at the end of the year because you understood the game. It's a game, you know, and that's like yeah, that's basically it. So there's a lot to know in the prop firm world, and I think a lot of people are just really, really, really uneducated about that. Like they see people making so much money, they're like, oh my god, bro, this guy just got 100K payout, bro. He spent $40,000 on evals and activation fees. Of course, he's gonna make 100K. Are you down? You're never gonna make 100K if you're not, putting risk on and uh, and you're not investing in prop firm accounts. It's just a game with it's a numbers game. It's a numbers game. It's literally the same thing. Let's say for me, I only traded 50Ks, okay? But one day I was like, bro, I'm just tired of being so patient and not be rewarded with a bigger payout for my patience and my skill. So I was like, I'm gonna stop with those baby ass payouts and I'm gonna invest more into bigger accounts so I'm getting rewarded more. That's it. This is the game. If you have 50Ks currently, then instead of looking left and right and be like, oh my god, I'm gonna switch my strategy. No, just you know, there is there, there is a lot to know about the prop firm world that you know could give you a better edge without switching your strategy. It's not it's not that they're not gonna like what I say. It's just everyone knows this if you have a brain. You know, it's just, can you have the right approach? No, it's just the approach that I preach. I'm just, I think I'm just being real. And it's important to talk about it. I mean, in my opinion, like, um, you know, being a prop firm trader is different than having a live account for sure. These are two different things, and everyone should know that. And that's why sometimes when you look at different firms, you're like, okay, this firm is way better. Because there is a lot, when you understand the game, you're like, okay, this rule makes it fucking impossible. And it's not the consistency, you know? In my opinion, what really kills all the gains is the fact that you're gonna blow so much money in evals. That's for real. It's like how many times did you, let's say you look back at a month and you were like, okay, for real, like I would have had at least 15 winners this month. Okay, let's say five, six losers, but I would have had at least 15 winners. But I was trading an eval and I couldn't take it seriously at all. So I settled for bad trades and I got impatient and I blew, let's say, $500 of worth of evals when in the first place, if I just bought an account with straight to funded, if I just bought a straight to funded account, I would have made the payout easily. How many times did that happen to you? For me, I cannot even count. So it doesn't matter how far back a 15-minute rally gap is. It does actually. Like if you have to zoom out all the way here to see it, it means that it's possibly not strong. You would want fair value gaps to be created either on the previous day or on the same day. And also like it's really good to have someone who's like who keeps telling you like who's always telling you like you guys you can do it. You guys got this because it's possible. It's like we need to understand how crazy this opportunity actually is, you know? And I need to be the guy to remind you of that opportunity every single day. I'm like, yo, lock in. You gotta understand the game. You gotta put in the time. You gotta put in the risk. Let's say. What copy trader do you use? I used to trade with Replicanto, which is a Ninja Trader um, copy trader. But right now I'm copy trading on Tradeify with the Tradeify free trade copier. So I'm only copy trading 550K Lightning account, so straight to funded account, no evals. Still no setups for me, but yeah, in my opinion, there was two good setups in terms of like the strategy I show on YouTube that respected all the rules. It was this short right here, 15-minute gap, and 1 minute inverse right here, 1 to 1. Don't even think about catching this whole move. This will never happen possibly. This will happen once every 3 months. So if you keep doing that every time you're spitting on so much bread. And the second one was this. Um, Not necessarily an easy one to take, but right here. So there was like a 2 minute gap, I think. So like the only entry would have been like at the close here. Stop loss would have been, below this inverse and a 1-to-1. And right here, the reasoning for it is the perfect sweep. I call this the perfect sweep, but let's say if I go on a 15, or let's say an hourly chart, we had the sell side right here being clearly a previous daily low. This on the 1 hour chart, you can see if it's really far away from on the left, if you go on the daily, it's definitely a daily low. All right, so right here we can see it's a previous daily low. We swept previous daily low, and if I go on the 1 minute chart, we cannot even close a singular handle below it right here. Not closing a singular handle below a level is a huge, huge confirmation. So right here sweeps one of the previous daily lows, and then we had a 2 minute gap. So if you're truly bearish, we should respect this gap in order to create a new low. This is the low volume area, so sellers are located right here, and if buyers are strong enough, then we'll close above this box, which will create buying pressure. So these were the two cleanest setups, let's say, in terms of inversions. And I really believe that right now there is a lot of good inversion plays. You know, uh, you remember like when, I don't know if you guys heard that, but let's say ICT back in the day used to say there's always going to be a fair value gap that will give you uh, 5 to 10 handles every day. I would say that right now the market adapted in a way to give you that 10 to 15 handles every day with an inverse. We see like a lot of good opportunities with that. So that's why I show it on my YouTube. But like I said, it's not my main strategy. I don't necessarily trade like this, but so many good opportunities. I'm gonna make a video on it, going back over a lot of trades and the opportunities um, from the past few weeks in a video, like a big video, let's say 40 minutes, and I'm going to go over multiple trades without any cuts, like true unfiltered video. And we'll see how that goes. I'm gonna go to the bathroom real quick. Right now, I don't see any good opportunities yet. To be completely honest, on this 15-minute chart, I would like to see a sweep of the AM low, creation possibly of a bearish gap. Let's say we push up a little bit more, and then we aggressively go down, creating, you know, the second candle. So that will be, let's say, the first, second candle, and then the third will sweep the low, okay, creating a bearish fair value gap here on the 15. and then I will look for signs of weakness at the lows here to trade back into a gap that is being created. So that would be the framework behind how I would trade, this sell side sweep. In terms of like, a small scalp for like a one-to-one low risk, it would be like uh, looking for price to get into this 15-minute zone and see if there's strong order flow confirmation to tell us that we're going to break the most recent low. Those are trades that I don't necessarily take, guys. I'm not gonna lie. If it's not, let's say, the best trade ever, let's say this one, it was a really good trade. Those two trades were good, but as soon as it looks crappy a little bit, I don't take. It needs to look good. I'd rather take less trades in a month, but be confident, super confident that they're gonna hit, and not just force something dumb. Hey, Amos, I'm here to learn something different. And you, I trade differently, but love learning new things, which I can improve myself with. Being in the background in a few of your streams. Came from Tradeify stream. Nice, bro. Appreciate you, Mario. Of course, I think I think being a student of the game is really nice, really important. That's why I really like to connect with other traders and know how they trade. It doesn't necessarily mean that I'm gonna apply what they say or like what they're doing. Um, but there is still a lot of value to gain from a lot of people, especially in this community. So yeah, appreciate you for that. There is, of course, there is like concepts that work and that maybe you could incorporate in your system right now, in your current system, that would boost your win rate. Maybe a lot of people told me this. They were like, "Oh, I was trading another way, and I found you, and it's going way better because I didn't have that framework." And they're using the framework without, let's say, not even using the inverse, but they're using the framework in order to understand how to find quicker scalps, and you know it serves them. So I'm happy. You don't need to trade exactly uh, like me or exactly the way that I show, let's say, on YouTube. You can take the framework or take something that I talked about and be like, oh shit, I'm gonna try this with what I have right now, and if it works, then let's keep on trading that. So let's say for me, like I have a really specific system, and the only thing that would possibly benefit me is order flow, is understanding the correlation between, if let's say usually I want to enter on a breaker, right? Usually what happens is this, like I said, there's like a breaker, an order block, and a fair value gap, right? But it comes with a framework. This is just, let's say, my entry model. And usually what will happen is that I will wait for price to pull back to scalp the most recent high. Okay? And I will put my stop loss, let's say, either at a 1-to-1 or at a 0.8. This is usually my strategy, right? On the 1 minute chart, 5 minute chart. With this, it's impossible to make money, really, in my opinion, but with a framework overall, it is. So let's say right here, the only thing that would possibly benefit me is talking with people that have been trading order flow for a long time. I've been trading order flow back in the day, but it would be like a book map thing, I think. So let's say I put my stop loss right here, and I put my take profit right here, and I enter right here. Okay. What I want to know is, what is the correlation between a big participant making, putting a limit order right here, or big orders below, let's say the area where I have my stop loss, um, and what is exactly above the pool of liquidity that I'm trying to scalp. Is there a big order right here? If there's a big order, let's say 4 or 5 handles above the high I'm targeting, could I reach it to increase my RR? This is like refinements. But in terms of refinements, with my model in terms of candlesticks, I went so far inside of that framework that I can't really look at something else in the candlestick chart without it breaking my overall framework or breaking my strategy. Like it would totally fuck up all my stats if I add something new or take off something from my strategy in terms of candlesticks. But in terms of frequency of trades, there is I have some strategies where I have a bigger frequency, and those bigger frequency like trading systems, if you can find these small areas where you would not take the loss and you would just pass on the trade, it will do you wonders over years. So that's a future thing I'm looking for sure, but not not on it yet. But let's say is order flow overrated? I would say it is totally overrated because it's literally the same thing as a candlestick chart. And even if you want to debate, like the big debate is okay, you can know when there is like real absorptions or real stops being taken out, okay, but that doesn't mean price will go higher or lower. You know what I mean? A confirmation on the order flow is not a signal to enter, if that makes sense. The overall framework you're going to use to read price is what's going to make you profitable. An entry model cannot cannot serve you um, as a way to make money, in my opinion. So like if you have good entry models on, let's say, the Nasdaq on the 1 minute chart, you don't necessarily need order flow. You know what I mean? And also there is a concept called spoofing, right, which breaks all the possible value you can get from order flow, which is spoofing is when, let's say price is right here, okay? And we know that, let's say, there is a lot of algorithms in the market, and price tends to draw back towards areas of liquidity, all right? But what is going to happen? Let's say these markets, let's say the futures market, indice market is, dominated by algorithms and whales, all right? What does that mean? It means that there's some people that have a lot of buying and selling power, which um, what can they do? They can move the market basically. So what are they going to do? They're going to put huge amounts of orders, okay, stacked orders below price. So price will be attracted to that level, okay? But when price is going to reach close to that level, they will take off their limit orders or the orders that they had below price, which is completely illegal, but we see that on the book happening every single day. It's called spoofing. So sometimes like you would, let's say you look at a candlestick chart and you're like, damn, I lost the trade. Can I find a reason why I lost? Sometimes this is what I call a manipulation. Sometimes you just got manipulated and you don't even know what the fuck happened. This is what happens in the market. A market dominated by whales can, like, some of those guys can move it, and uh, spoofing is a real thing. So let's say you would see a lot of orders just below you, and then you're going to be like, okay, that's a reason why I would get out of my trade. So you would get out, but then let's say they would take off all their limit orders, and price would just automatically go back up. So it's like a lot of fake outs because of uh, stuff that are not legal, basically. So spoofing is a real thing, and yeah, we're talking so much about the framework. Can you quickly speak about that, please. What's the framework? A framework is a way to anticipate where price is going to go on the higher time frame. Let's say there is different type of frameworks. Let's say you need, let's say in trading, you need to have the same way of reading price every single day. That's just the most important thing. If you come every single day with the mindset of, okay, I'm going to look at the chart exactly the same way that I did yesterday, and I'm not going to take things based on my intuition and the way that it looks, but I'm going to, respect the way that I'm framing every single trade, so um, I have data behind my trade, right? So let's say framework. You would use a initial hypothesis on price action. So let's say you go on the 15-minute chart, and for you, the 15-minute chart would be a time frame that is a good time frame to find quick scalps, all right? And you would use, let's say, 15-minute fair value gaps as your framework to understand who's in control of the market in the current session that we're in. If you create bearish fair value gaps, what does that mean? It means that sellers were so strong that we didn't trade inside the second candle, right? So let's say here, a fair value gap is a 3 candle pattern where the down wick of the first candle doesn't touch the up wick of the third, okay? A bearish fair value gap, let's say. And this candlestick confirmation is an area on the higher time frame that you can expect that there's a lot of sellers inside the zone. Okay, that is a huge part for your framework. So now, since you have the hypothesis of there's a lot of sellers inside the zone, and last time we traded around this area, sellers were the one controlling the market. Look at what happened on the 1 minute chart. Boom, big sell off. So you draw this box, and now there is multiple frameworks you can have when you create those gaps. First framework, you wait for price to get into this box, all right? So for buyers to step in and enter a zone where you know a lot of sellers were present last time we traded around this area. Now, what do you want to see? You want to see bounces from this zone. So you either want to see a reversal happen from this fair value gap, or you want to trade back into this fair value gap knowing that it's a magnet because there's a lot of sellers in it. So those are like two frameworks. You use gaps on the 15-minute chart to frame possible reversals or trades back into this gap, knowing that this gap either acts as a good reversal point or this gap either acts as a magnet. So this is, let's say, if you go every single day in front of the chart and you're like, okay, I'm going to look for those 15-minute gaps. I'm going to look at what is going to happen when we tap inside of them. What is going to happen when we create them? Do we pull back into them? Do we, do we respect them? Do we just create them and we go down? So one thing you will see is that once you create them, you usually pull back to them, right? And second, once you pull back to them, if you respect the upper portion, so let's say here it's a bearish gap, so it's the lower portion, you usually have a quick reversal opportunity. So that would be a overall framework to, frame your trades. Okay, price, this right here, we create a lot of selling pressure right here. There's a lot of people waiting to defend their position. What is happening on the order flow when you create a gap? It's low volume. It's an area where there's not a lot of traders that had the time to, step in the market. There's like a big area of low volume. So there's two things that can happen. It's either you feel the low volume and you respect it, or you disrespect it completely. So your framework would be reactions from gaps, or uh, reactions from highs and lows towards gaps, if that makes sense. So there's a lot of different frameworks you can have. You can have frameworks around, what's the correlation between Asia and London and New York. Let's say your framework overall could be, okay, me, with my data, I see that every time Asian forms an accumulation, and then London breaks, let's say the high of Asian, and reverses, creating a market structure shift, right? So that would be Asian, that would be London, right? And then at New York Open, we open up right here. Usually what happens is that we already have the creation of the power of three of a bearish candle. So we usually see a bearish distribution during New York. So I'm going to look for buy side liquidity sweeps, bearish market structure shift to see price going down. So now this is your framework. Okay, I'm going to look for value gap here. Boom, respects it, enter short, go back down. But when you have all those things inside your head and you're like, damn, I see all those traders, they look at super like strict things and they have rules. This is exactly what you should do. Like if you're trading based on intuition and you think that price is gonna go there because it looks good, chances are in 5 years you're cooked. Just being completely honest. You need to know exactly what the fuck you're doing. It's as simple as that. It's different frameworks. I can show you exactly what I mean. Let's say I go here on kill zones, like I can show you the day exactly what I was talking about right here. So you see, this is a framework overall, okay? But this is based on the daily, so it's a bigger picture play. Look at what Asian did. It created a range. Perfect. London opened, swept the high, and then we shifted below Asian low. What is going to happen during New York session? We would expect that this is the real high of day, right? And we would respect this market structure shift to create new lows. So right here, this is the area where you would look for shorts. You see, this is a framework. So it's a London reversal, New York continuation. This is a framework, a way to read price on the higher time frame. This is what's going to give you the narrative behind why you would take the trade. So then you would scale down to a lower time frame and be like, okay, this is New York Open, it's 9:30. So now I'm looking for possible shorts. Where is my gaps? I have a 15-minute gap right here, right above price, and I have also 5-minute gaps that can act as areas where we could bounce from. So I know I have those two levels where I know there's sellers. So now, boom, I go on the 1-minute chart. I'm gonna be like, okay, I'm gonna look for shorts and I'm gonna take 2 trades. If I lose them, then I'm gonna get the fuck out. If I win them, then it's good. Perfect. I have my first market structure shift back to the downside. I'm gonna take shorts here, stop loss right above this high, and I'm gonna try 2 trades with 1 to 3 risk to reward. And then boom, what's gonna happen? You hold, then you push price down towards the most recent low, and you got your trade off of your framework. But then how many years of data can you have uh, to understand that this is actually a real thing, this actually works, this is my parameters to enter, to get out, etc., etc. Can I, my camera is right here, so I shouldn't talk out here, but yeah, you have to also put in work in backtesting to understand deeper into those concepts and like refine every single day. Go into your journal. Damn, okay, this is what happens. This is what's happening in the last 3-4 months, and I couldn't capitalize on that because I was framing my trades based on what happened in the last 5 years. But right now, the market conditions adapted in a way that I can make money off of something else using the same framework. So now this adaptation, this is what's gonna let you be in the game for long enough without blowing your accounts. You know, this is like, this is why I say that you need to put in time. It's literally like a sport. You can't make money if you're not skilled. You just can't. Like for me, like you could be lucky, but one day or another you'll give back that money. That's for sure. For sure, for sure, for sure. You could have 3, 4 months win streaks, takes one bad loss streak, and you're cooked. So there's a lot of good frameworks overall, and not to spit on everyone, like on anyone basically. Like you will never see me talk shit about anyone or like any type of trading at all. Why? Because let's say you take an overall framework from someone else, you could definitely put in enough time to be like, holy shit, I became like almost a pro using this framework. You could, you know? So that's the exact same thing I did. I took a framework, all right? I was like, holy shit, this works pretty damn, like this is pretty fucking accurate on the higher time frame. Now I'm gonna dig deeper into this exact concept to know, okay, when am I losing? When am I winning? What is the timing? When does the low form, high form, this, that, and then all of this data, all this 1%, you're trying to get 1% better every single day, it compounds. And at the end of like 2 to 3 years, people look at you and they're gonna be like, shit, he's so far away from me, but he took an overall framework that you would possibly know, but he got so good at it that you see him as a market wizard when he's not, you know, at all. I have 500 accounts. At the moment, I have been building them slowly. I already got a few payouts and have not blown them because I control my losses. If I hit it, I'm done for the day. This week, 2 trades up 2K. Good shit, bro. That's what we're talking about. You want to know how to scale better? Scaling is a dangerous thing, man. The 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 times where I was like the saddest in trading was because I tried to scale when I wasn't ready. I'm telling you. It's like you know when you want to, you know when you're supposed to scale. You know, you'll know it exactly when to scale because it will have, like, if you have so many consistent months in a row, this is like the hard proof behind why you should scale. But if you don't have all those stacked months of 6K, 7K, 10K, then scaling up is just going to hurt you more than not. Slow and steady wins the race in trading, in my opinion. So, like, scaling is, in fact, what will give you psychological issues. That's why when I talk about psychology, I'm like, all right, am I gonna feel something? Let's say I have a strategy, all right, and I want to follow it, and am I gonna start tripping over a loss if I trade with $20 of risk on a 50K account? No. So I'm like, all right, psychology is not that important if I risk something that I'm comfortable losing. Perfect. So now I take into account that I know I can manage the losses on, and then one day you're being pretty consistent with those, $100 wins and $200 wins, getting consistent payouts, and then one day you're like, all right, I'm gonna scale, and you start losing amounts where you can't afford, let's say, to lose that amount because you don't have enough capital in real life to sustain the prices of the accounts that you bought, and that will give you psychological mistakes when either you know you don't have enough capital in real life to sustain the cost of your prop firm accounts, or you're trading a size that is not right for you, and you literally feel stressed when you're in a trade. This is when you're gonna fuck up, you know. So, in my opinion, taking it slow, you're gonna know exactly when you should scale, and uh, yeah, if that's a good advice. Swept the low here. I would look for a potential reversal play here if we can. What time is it? Can you show your fib settings? Wait, my fib setting is this. So it's this is my brother's one. We're gonna ask mine. So it's this 0, 38, 2, 61, 8, 1, 79, point 0.3, point 0.5, 236. I usually look at the fib to have a good understanding of how deep the retracement like are gonna be usually, and where to put my stop loss in a position where if it hits the level, I'm gonna be like, okay, retraced way too deep. I don't want to be in this trade anymore. If you have the mental, you should be winning. But yeah, if you're trading the right size, of course, and if you have you don't have any problems in real life regarding money, of course. But you know, it's really hard to judge on that subject. You know, we all have different lives and different problems and different situations. So saying to someone, yeah, you should be making money right now, even if he has a profitable strategy, is hard. It's still hard for some people, but you know, just gotta stick to it, I guess. Like you see, I went on stream literally right here, wanted to take a short, didn't get the pullback, and then that's what I have. That's what I'm working with. Come on, come on, guys. Hey, Amaz, do you recommend using the ATM settings for TP stop loss? ATM? What is ATM? ATM settings for TP stop loss? Um, is the 15-minute for value gap and lower time frame inversion for value gap your main strategy, or do you use? No, it's not my main strategy. My main strategy, I don't really talk about. Um, but you know, I would be dumb to not tell you that what's happening currently with the fair value gaps is insane. It's really like it's incredible the win rate that it had. And actually, like being completely honest, like it shocks me. Like in July, it's actually laughable. Automatic stop loss. So like a bracket order, you mean? Oh, so like having like hotkeys and stuff, like that's what you mean? Depending on you is, let's say for me, my scalping, I don't necessarily need to do a lot of, I don't need to touch my keyboard that much or you know do a lot of decisions. I just put my take profit, my stop loss, and I set and forget basically. So I don't really use bracket orders. Bracket orders would be it's still like it would still be good in a sense, but I still have time to like the first thing I do is I put my limit order. I put my limit order, then I put my stop loss and then my take profit. So it's pretty fast still. Following it, doing pretty good so far. Nice. That's really nice to hear. Just the first thing, just auto gamer, don't be the guy that when it starts to be difficult or you're gonna start being break even with the strategy, that is going to start hating and try to find something else. Trading is exactly like having a girl or having a wife. Uh, like at the beginning you're like, shit, she's crazy. I deserve something better. But then you're gonna find another girl, and she's gonna be even fucking crazier, right? And it's not gonna be better in the other. Um, it's never better. Okay, it's never better somewhere else. Okay, just stick to what you have and build on it. So just find the reason why you fucked up. Find the reason why it failed this month, or it's a whole learning curve. It's it's not supposed to be easy and hit every single time without you even thinking. You have to do some refinements depending on market conditions. I think that was still a good way to describe things. You can't strategy hop because it's never better in the other. Even if you think it's better, it's never better. But it's for real, bro. VIP, it's for real. It is a nice example. And if you're a guy, you know exactly what I'm talking about. Like, right, they're all the same at the end. It's every single one has, every single strategy has their own, win streaks, own loss streaks, own, problems regarding, the frequency, um, the risk. So, you know, do you mark first for value gap? Not really. I'm not into. I'm not really into like all those new stuff and like all the new ICT stuff. I just have my strategy and I go with it. If it works, it works. If it fails, it fails. You have a BE protocol? Yes. If yes, depending, I have like two main strategies. But if let's say I'm in a long, let's say it looks like this. I usually like take this as an example. But let's say I'm getting filled here. Okay, so this is my entry and my take profit is right here usually. If ES takes out the high and NQ doesn't, either I take out my profits or I let it, I put my stop loss to break even. So no, I didn't take any trades today, unfortunately. But that doesn't look like a bad long. There's like a small 5-minute gap, 3-minute inverse. There's no hard time frame for value gaps. That's quite a bigger picture play, but we can see it in real time being created. That squeeze. I'm not gonna take part into this, unfortunately, but we'll see what we can do with this candle. Yeah, totally agreed. I studied most ICT concepts, always found it difficult to find daily bias. This was like the first time I felt confident in taking a trade. Mm. Oh, you're talking about with the on YouTube, Auto Gamer. You're talking about this strategy. The thing is like the more mechanical you are with it, the less the less discretion you have in your system, the more easy it will be for you to understand your losses and refine your edge. When there's always discretion, you will blame yourself for not taking the right decision when in reality it was just you just don't have the same approach of reading price every day. It's like you're literally trading off of like of thin air. You know what I mean? It's like how can you refine a system that doesn't have super well defined rules and that is purely based on your decision making? So for me, like those kind of systems are like literally gambling. It's like part-time gambling. And the thing is with that type of trading, let's say super discretionary trading, you will have to face like the hardest psychology uh, hardships ever. The like you blaming yourself for taking a certain trade and not be able to exactly know where you went wrong is why it's so difficult to let's say find your daily bias, because you're using like so many different stuff, and at the end, when you lose, let's say when you don't have the right bias, you're just gonna be like, oh damn, um I made a mistake. Uh, I did not, like, let's say I did not interpret that uh, with the right way, but in fact, you just don't have a systematic approach of reading the higher time frame. So yeah, less discretion, more data. That's for sure. That's for me though, because I know I'm not that guy who can. I cannot blame myself for taking losses. I'm gonna turn like a. I'm gonna be a psychopath. Like what? I'm blaming myself for taking a loss for what? If I followed my plan, like how can I even say it was a bad trade in the first place? But no, I didn't take any trades today, and it doesn't look like I'm gonna take anything. Already 2:30, getting pretty late. How many legs do we have, guys? 58. God damn. Barely enough to do an advanced account. Come on, guys. Bruh. Have you ever doubted your system? Such a good question. And yes, I did. Yes, I did, bro. I did. I did doubt my system more than one time. And really, what was happening with me is that when you dig so deep into the data, you start understanding that, like, basically you want to refine to a point where your system would be perfect. And trying to chase that perfection in something like trading will make you lose your mind. And for me, let's say, especially in the beginning stages of finding my edge, I couldn't accept the fact that I was going to be wrong. I could lose 7 trades in a row. I was like, bro, it doesn't work. How can I lose 7 trades in a row? Like, I need to find a reason why I lost those 7 trades. But as soon as you understand that you just have to keep going, like, you cannot have a perfect system. You have a system, but it will be broken sometimes. We just have to keep going with it, and things will go all right. That's when your whole like mentality shifts. And for me, it was that, like, I couldn't accept the fact that my system was not perfect, so um, I would always doubt. I was doubting the fact that um, you know it could be like it was not perfect yet. Basically, I was like, oh, I think I could refine it more and more and more and more, but at a certain point, uh, you just gotta accept that it's not perfect. But that's a really good question. But let's say when you doubt your system, it's because you don't have, let's say, enough data on your system in the first place. If you, let's say if you back this for 3 years straight, you will never doubt. your system. Doubt comes from a lack of repetition, in my opinion. I would never doubt that I would have a bad grade in an exam, let's say in uni, if I prepared for the exam. It's impossible. I would doubt if I didn't prepare. Simple as that. Did you forget the giveaway? No, I literally said 80 likes and we do an advanced giveaway. We're at 59. I said it like 55 times. But I appreciate you, Sam, for putting PFT in your name. I don't know if it was already there, but that's the name of my Discord. So that's a good possible long here. I'm not gonna lie. I don't hate it. You see, like how when we swept those lows here, we immediately are rushing to get back towards this internal gap. That's a framework, a scalping framework. You see, like let's say people were trying to long here back towards this gap, you will face a lot of fake outs because you don't have enough fuel to go back towards this internal gap. What is the fuel? Lows. So you want to trade from lows back towards internal gaps, or from internal gaps back towards lows. So we're at 60 likes. Professional futures trader. Damn. Come on, Sam. I thought it was Sam Pockets Full Trading. But yeah, we have 60 likes. I guess we're just gonna do an advanced. We're gonna do an advanced. So you see here, boom, price rushing through this 15-minute gap. Now you want to take a look at the reaction when we hit this gap. Oh, didn't have any trades, like clean trades today for me. How is your journaling? Does it look? Basically what I do in my journaling is that I have multiple strategies, and after every week I journal all the trades I could have caught using that strategy or that entry model. And as soon as I have this, um, let's say I know that in the current market conditions, this is what works, this is what doesn't work. So um, I'm quite in touch with the market with my approach. Like that's basically what journaling is all about, is understanding which one of your, let's say you have a playbook as a trader, and which play in your playbook is actually in play, like actually works right now. So we're gonna do the giveaway right now. I think there is still this looks ass. This looks pretty ass, bro. Could see a possible bounce from this gap though. Would like a power of 3. Let's do the giveaway. 50k advanced account. Alright. So usually if you win a giveaway, guys, I send the codes on like Saturday or Sunday. Yeah, Sunday. So don't be spamming me in my DMs and stuff like that. You're gonna get the code. Alright. So let me do this. Alright, so let's go, let's go. Alright, 50k advanced account. Boom. Uh, All right, word a must. The word is a must. So lock in. You can type the word a must to get into the giveaway. Um, if you are subscribed, like you need to be subscribed to my channel in order to win the giveaway. That's first. If I see you're not subscribed, on God, uh, you're out of the giveaway. And second, I think if you are subscribed, you have twice the chances of winning. So word is PFT, so spam PFT in the chat. Oh shit, I'm done. It's a must. Spam a must in the chat. My fault. What is that? Spam a must. Spam a must in the chat. My fault, guys. I'm literally tweaking. A must, a must. Alright, so in like, I give you guys 1 minute and I'll do the giveaway. It will be for a 50k advanced account since we don't have a lot of likes today, but it's a Friday, nobody trades on Fridays. So spam the word Amos in the chat. As soon as I see we're 60, I'm gonna start because after that, I know there's a lot of bots, people trying to get into their second, third, fourth account. We're 40 right now, so still quite some people left. I'm gonna start it in like 15 seconds. Need to be subscribed to my channel. Alright? And if you didn't like the stream, we're at 66, so not too far from 80. 45 people. Come on, spam the word of must. Yeah, I see people from my Discord. Goat, MJ. Oh my god, I'm retarded. Yo, spam it again, spam it again. I'm actually retarded, bro. Oh my god. Yo, spam it, spam it, spam it, bro. Oh hell no. I I reset the thing and it all went away. So spam the word of must, my fault. yo, yo, my fault. Yeah, on God, 15 seconds though. Like you should be like in front of your screen. 15 seconds. Spam the word of must to get into the giveaway 50k advanced account Tradeify. So lock in or clock in. Alright, 42 at 60 I'm starting, so like 10 seconds. Yay, 60 I'm starting. Alright, good luck, have fun. 5, 4, 3, 2, 1. Good luck. Damn, pockets full trading. Oh hell no! 52 seconds. You have 52 seconds to claim to type in the chat. GG's. Them. Professional futures trader. Congrats. You have 35 seconds to type in the chat, or someone else will win it. Alright, you type. Bro, what a coincidence. GG's. You literally said you forgot about the giveaway and you won, so congrats, brother. Um, yeah, you usually never win. Alright, guys. I don't see anything really clean for now. And we're getting pretty late into this Friday. I don't want to give back any profits, to be completely honest. Um, like I said, appreciate you guys for showing love every stream. We're getting bigger and bigger, so appreciate you guys so much. Also, with the conversation we had today about prop firms, if you want to check out a prop firm, make sure you go with Tradeify. All right, you don't even need to pass any evaluations. Straight to funded accounts are the biggest edge in this game by far. So use code AMOS for the highest discounts. This is exactly what's giving me the chance of doing those giveaways and giving back to the community. If you guys use my code, I just have more accounts to give away. This is how it goes. So appreciate you guys so much for sticking by me, and have a lot of good things coming with the Saturday sessions, Sunday sessions with Tradeify also. A lot more prizes to win if you're good at trading. So yeah, appreciate you guys so much, and I see you guys on Sunday for a weekly recap. All right, peace out, guys.